I'm Shay Russell from mining.com.au, and joining me today is Warwick Grigor, a veteran mining analyst. Warwick, it is a pleasure to have you on. How are you?
I'm very well, thanks, Shay.
Now, Warwick, I have used the words veteran mining analyst to introduce you. However, I don't feel that really underscores the depth of your experience, your 40-plus year experience in this industry. For everybody who's new to your face, can you give us a little bit of a rundown on your background?
Well, I started out in the stock market at the age of 12. I then went into formal employment in the early 20s after a short stint of time at Hammersley Iron. Amongst other things, I've been a senior analyst at County NatWest. I set up Far East Capital with Andrew Forrest and was his 50-50 partner for 5 years, taught him everything he knows about mining. And then I moved on to establish Canaccord Genuity in Australia as an executive chairman. Started out with 7 employees, left when they had about 100. And when I left, I retired to go off and do private things and just have more fun.
One day I'm going to pull on that thread and ask how you started out in this industry at 12, because I certainly know I can't get my 12-year-old son interested. But at the risk of derailing today's conversation, I want to bring today to look at gold and a particular company, Aguia Resources, in question. First and foremost, before we talk about Aguia, you have been covering gold for a long time. This has been a special focus for you. What is it about gold that you are attracted to? But also, do you have an overall view on the shape of the gold market right now?
Yeah, I started out in the gold business as an investor in the late 70s, and I lived through the peak of $800 an ounce in 1980. That was before I was in employment. But what I see with the gold price now, a very similar pattern that we saw in the 70s leading up to that $800 an ounce peak. I think the gold price is going to keep improving from here. It wouldn't surprise me to see it at 5,000 an ounce within a year or two. But I particularly like gold. It's very suitable for junior companies because you produce the gold and you turn it into cash a day or two later. It's very suitable for juniors because you don't have to have long-term contracts. Every gold project is different. There's no two that are the same, and there's always opportunity. But what I look for in a gold company is not just the fact that they're producing gold, but I look for expanding production. I look for exploration potential. It's not gold per se. It's an expanding market, a growing company, growth stock in the gold industry. That's what I look for.
I'm so glad you talk about a growth stock in the gold industry, because that perfectly takes me to Aguia Resources. Now, I know you are a chairman of this company, but I wanted to ask you in particular, what attracted you to their gold project out in Colombia?
Very high grade. And when you've got high grade, grade is king. What I liked about this project, it had gone through a trial mining phase. It went through a trial treatment plant. And so you determined all the mining parameters, all the metallurgical characteristics, not in a laboratory. You actually did it in real life. So when we picked up this project, it had already treated 500 tonnes. It had recovered 20 grams per tonne. I knew from that point this was definitely an economic proposition.
Now, you talk about it being very high grade. Just how high grade are we looking at?
Well, the ore body starts at 30 grams per tonne in situ. Now, obviously you suffer dilution in mining and metallurgical recovery. Officially, we don't have any JORC resources. So we walk a bit of a tightrope there as to what we can say. The exchange won't allow Aguia to call it a mine, for example, because by their definition, you can't have a mine if you don't have a JORC resource. But my response to the ASX is, well, where do you think this gold came from if it didn't come from a mine? It's nonsensical. So let's get the terminology. Let's get past that. It's an operating mine now. It's selling and pouring gold, and it's growing from here. So it's a mine.
selling and pouring gold is music to my ears in this climate where gold is in excess of 5,000 Australian dollars per ounce. But I've got to ask, you said you look for companies that have got future growth plans ahead. What are some of the future plans for Aguia Resources?
Well, we've just successfully recommissioned the mine, and now we're ramping it up. An underground mine, there's always work involved. You can't stop and relax from one day to the next. You've got to be planning for growth. We've got a plant capacity of about 50 tonnes per day. Our mine can deliver 15 to 20 tonnes per day, but over the next few months we will ramp that up to 30 tonnes per day and eventually 50 tonnes per day. It's on a growth curve for the next several months at the very least. Beyond that, we've got a drilling rig working now for the first time, and that will enable us to come up with a JORC resource within a few months, and then we can officially call it a mine. We'll be compliant, but it's not going to make any difference to us in the short term in terms of producing and selling gold. You can see the ore body. We know it's there. We're just going to be ramping it up from here, and it promises to be a very profitable operation.
Listen, Warwick, thank you so much for taking the time to jump on today. You can bet your bottom dollar I will want to have you back on. Thank you so much for being here.
Thanks, Shay.